Hey guys, welcome in this video. I hope that all of you are doing great. So in this video, we're going to take a look on how to trade gold the right way. So I'm going to share with you a lot of tips and a lot of different things that you can implement in your trading right away after watching this video. And your results will most likely improve simply because these things work. I do this in my own trading as well, and they give me pretty good results. So just be aware that you can apply these things not only on gold, but also for all the other markets. But I'm going to use gold today as an example. And then you can just ask yourself the question, well, does that make sense to apply this on other markets? And most of the time, the answer will be yes. So I'm really excited to share all of this with you guys. Make sure that you stay until the end of the video, simply because there will be value throughout the whole video. And also, if you can just drop me a little like and a subscribe, I would really appreciate it. So let's just dive right into it. So as you guys can see, I'm on gold on the daily chart right now. And right from here, I can already give you guys the first tip, which is that don't try to day trade gold, okay? Gold is not an instrument that should be day traded, okay? It's more a instrument that tends to work and to show good results over the medium to long term when we have big trends emerging on this market. So don't try to day trade gold. Don't take trades every day or every single week on this market. It's not the purpose of it. It's not the way that it works best. I've done a lot of testing. I've done a lot of different comparison, right? And gold really is a market that over time tends to work better for strategies that are optimized for the medium to long term. So day trading gold is really not the best idea. It doesn't mean that you cannot be profitable doing it, but if you want to optimize your results, if you want to get the best results possible, well, the idea is to go more on higher time frames. All right, so that's the reason why we start on the daily chart. I will also take a look at the monthly chart, the weekly chart, but under the daily chart, it is already less reliable. So the daily chart is the most important time frame, especially on gold. So that would be, well, already, right, the second tip. So as I said, right, this is the chart that we have on the daily. If we look at the monthly chart, it looks something like this. We can even use a logarithmic chart to see properly the moves. And as you guys can see from this chart, we have about 50 years of data. And the next thing that we can already see from that is that over time, gold tends to go up, right? So we have a nice uptrend on the chart. Now, what does that mean for us? Is this important? Well, the answer is yes, it's very, very important, because if we see that we have a long-term uptrend on the chart, it means that already from a probability standpoint, we have a higher probability to make money from the long side than the short side. So what does that mean? Well, that means that most of the time I will try to buy gold. I will not try to short gold. Now, can you short gold and make money? Of course you can, right? If there is a very specific and particular situation that allows you to short gold and have a high probability of success and make money, sure, I will do this. And these situations are possible. Sometimes there will be a situation on markets where I will be like, okay, maybe that gold will go down for a couple of days or a couple of weeks, or maybe even a couple of months. That is possible. But keep in mind that over the long term, just like we can see right here, gold tends to go up. It is in an uptrend. So in terms of probability, it makes a lot more sense to simply buy gold than short gold. And so if you repeat this again over the long term, well, that is how you optimize your results. So I will always have a tendency to look for higher prices on gold. Now, sometimes, right, I will get in a trade and it's not going to work. That's normal. Every single strategy is not going to work 100% of the time. Again, the goal, right, is to get good results over the long term and on average, right, to come out profitable. And so, well, that is another way for me that I go about increasing these probabilities. You always have to think like that as a trader. And so that's another tip for you guys, which is more, in terms of the psychology, but you always need to think in terms of probabilities and how you can optimize and increase the probabilities of you getting the trade right. Okay, Now, if we go back on the daily chart, one thing that is really important to understand, and it's even more true on gold, is that this instrument really tends to move when there is a strong fundamental reason behind it. So for example, right here, this down move that you guys can see here was the initial reaction that the market had because of the COVID-19 pandemic. And then we had the recovery right here. So a big, strong push to the upside. So there was a rush to gold, a rush to safety, because gold is considered as a safe haven. Then we got a correction that lasted a couple of months, and then we went back into a really, really strong uptrend. So as you guys can see, these moves right there were extremely strong, very sharp, because there was a fundamental reason behind these moves. And so if you look at, the last year of gold history right here, we can see that not much happened, overall, right? From here to where we are right now, well, it pretty much just did up and down on the chart. And that is simply because, well, at the moment, there is still no big fundamental reason for the market to move. It doesn't mean that the market is not going to move. It doesn't mean that there is not going to be any trade setups. It just means that when there is not a really big fundamental reason behind the moves, the trades are going to last more, maybe a couple of days or a couple of weeks. And when there is a big fundamental reason for the price to move, the trades will last more, a couple of months, and maybe even a couple of years. So that is really important to understand. So that is, again, another tip for you guys. When you look at the chart of gold, you need to do your fundamental analysis, and you need to ask yourself, is there a big fundamental reason right now for the price to move? Or are we expecting to see a big fundamental reason in the future? If the answer is yes, then the trades could last longer. If the answer is no, if there's really nothing that major happening on markets, well, the trades are going to be more medium term. And so you will need to also adjust according to this in order, again, to optimize the probabilities. So to give you guys another example, right here, more recently, we had a pretty strong down move on gold, right? Not that massive, but quite strong, right? And it was very fast, as you guys can see. So the reason why we had this is simply because of what we had with the Fed a couple of weeks ago, where they said that they were starting to think about lowering their QE program and maybe, hiking interest rate at some point sooner in the future. And so gold went down simply because gold tends to perform better when interest rates are low and when there is high quantitative easing, right? So if these are being decreased, or if the markets are looking for higher interest rate and lower QE, then this impacts negatively gold. And so this was a potential trade idea right here. So as you guys can see, we also had a nice trend line that was respected many times. And when we broke the trend line at the same time of the fundamental shift, then this could have been a trade opportunity. Now, again, as you guys can see, this went down. And what did I say at the beginning of the video? I said that most of the time I will look for situations where I can buy gold. I will look for long opportunities. So did I trade this move? No, I did not, but I was already in long positions from these levels here, so I had to manage these trades very carefully. I'm still in these trades right now. As you guys can see, for the moment, gold is recovering quite well. We will see what happens with this level and this one as well. But overall, the situation is already better than when this was going on. But this was an example of how you could have traded it. Now, as I said, not the most optimal example, simply because the move was to the downside, and historically, gold tends to go up, so I would rather long than short. Now, if we zoom out a bit, one thing that will be interesting to keep an eye on in the next couple of weeks and in the next couple of months, so listen carefully. If we look at this market right here, right? Well, we had a big uptrend, and right now we're getting a big correction as well after this uptrend, okay? And so if we look at this correction here, well, what we can notice is that we always have lower points inside of this correction, and the last one was right here. And so we don't know where the last lower point will be, and that doesn't really matter, but what you can look for is simply for the market to eventually break higher these lower points, and when it does, it will be a really strong technical shift. And so this is a really important part of the process. So when you have done your fundamental analysis, you also have to do your technical analysis, okay? And so when you do your technical analysis, the idea will be that fundamentals and technicals will need to line up together. They will need to match. And this is when you will have the best trading opportunities. So this is when basically the moves will be the bigger. And so one thing that I will, again, personally be watching here is simply how gold is going to react according to these highs right there, and when it's going to break higher. And if there is a strong fundamental reason that comes with this break higher, then this will be a really nice trading opportunity. So I don't know if this is the last high before that it breaks, or if we make another one here and then it goes back down. No one knows, but it's not important. What we just need to wait is, well, for the breakout, and if there is good fundamental reasons to buy gold at that time and we have the breakout, then we have a perfect trade setup with high probability. So that is the idea, and that's kind of the process that I follow to trade gold. As I said, you can use this process to trade anything really, but it works really well on gold. So as you guys can see, right, if you just look at these higher time frames, you're not going to take a lot of trades during the year on gold, but that's how it should be, right? Most people on YouTube will tell you that you should day trade and that the more trades you take, the better it is. That is not true. It's actually the opposite. The least amount of trades that you take is the better, simply because you want to take only the best of the best of the best opportunities, and to find these opportunities while they are on higher time frames where fundamentals, technicals line up together. All right. So that's it for this video. I hope you guys learned a lot from it. I hope you enjoyed it as well. If you did, you can leave a like again under the video. I would really appreciate it. Don't hesitate to share it around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.